In our today's weekly money market review, we shall begin with the money market highlights. And the money market remained highly liquid throughout the week under review, and open market operations were witnessed. Interbank activities declined again marginally from 21 to 14 transactions, with the trading volumes also coming down to 7.9 billion from 11.4 billion that was posted the previous week. The interbank rate slightly improved following the same trajectory and responding to the declining transactions and volumes, increasing or improving to a 9.5% from the previous 9.45% that was posted last week. And the banks have maintained their liquidity, surpassing the required 3.25%, posting 11.1 billion in excess liquidity. The market inflation rate posted remained at 4.5%, but as always, we have observed, this being the monthly posting on the inflation rate, the value to consider in your evaluation of performance should be a figure in between 5 to 6%, while the market interest rate, as posted by the latest Treasury bill auction, posted a 9.5330% for the 364-day Treasury bill, a 7.9851% for the 182-day Treasury bill, and the 91-day Treasury bill posted a 7.9143%. And therefore, a careful consideration on the net market interest rate, with a 9.54% posting by the 364-day Treasury bill, which is the paper that gives us the market interest rate, subjecting that return to a withholding tax rate of 15%, which amounts to a 1.43%, then the net market interest rate will be 8.11%. And that is the rate that we shall be using to compare the performance of the money market funds, as we shall be looking at the top 10 money market funds as posted in the current week. And as per this schedule of the top 10 money market funds in terms of their performance for the week, the top performing money market fund as per their interest rate was Taifa Money Market Fund, which is commonly known as the Ndovu Money Market Fund, which posted a 13.10%, giving us a net return of 11.14%. In number 2 was Saiton Money Market Fund, posting a 12.90%, which leaves us with a net of 10.97%. In number 3, with a lot of improvement, was Nabo's Money Market Fund at 12.70%, giving us a net of 10.80%. Avocap was in number 4, with a rate of 12.30% and a net of 10.46%. GovCap lost their second position to position number 5, and that registered at 12.20%, leaving us with a net of 10.37%. Ethica Capital's Money Market Fund is giving a 12.10% and a net of 10.29% in position 6. Position number 7, we have Lofty Carbon Money Market Fund at 12.10% or so, and leaving us with a net of 10.29%. Orient Kasha took position number 8 with a 12% gross return, leaving us with a net return of 10.20%. Kuza's Money Market Fund is at position 9, 11.40% with a 9.69%. And closing number 10 is NWealth Money Market Fund with 11.20% and a net of 9.52%. A good observation is that the top 10 money market fund are giving a return that is way above the market interest rate that we have just identified, giving us a net of 8.11%. And therefore, as a key objective of the money market funds to give investors a return that is way above the prevailing market interest rates on the short-term instruments or short-term papers, the top 10 money market funds met that objective. Also to note is that the top 8 money market funds are the ones that are giving us a return that is a net return that is above the 10% mark, with Orient Cash in number 8 closing at 10.20%. Adjusting the net returns from the money market funds with the inflation rate to get the real return, growing our capital in these investment vehicles, then we have the top 3 money market funds, that is Taifa Fondovu Money Market Fund and Saiton and Nabo Capital's Money Market Fund, giving a return that is above 6%, with 6.64% for Ndovu Money Market Fund, 6.47% for Saiton Money Market Fund, and Nabo's 6.30%. In the next 3, that is Cap Money Market Fund, GovCap Money Market Fund, Etika Money Market Fund, and Lofty Carbon Money Market Funds are giving 5.96, 5.87, 5.79, and 5.79 respectively in net real return. Kuza has a 5.19, and closing the top 10 list is a 5%, 5.02% from NWealth Money Market Fund. While it has become a debate on whether money market funds are savings vehicles or investment vehicles, it is important to note that there can't be investment without saving. Saving comes before investment, and as per the reports by the Capital Markets Authority, money market funds still remain as the most preferred investment vehicles in the market, holding more than 60% of the total assets under management in the collective investment schemes, in excess of 300 billion Kenya shillings. Some of the other factors to look for besides the return when selecting or choosing a money market fund for your saving or investment is, one, whether the fund manager or that money market fund has an online application as your interface between yourself as the investor and the fund manager. That online or mobile applications will give you a quick access and interaction with your account with the fund manager. The second important thing to consider is the customer service or customer experience that you are expecting from that money market fund or the fund manager for that particular product. You cannot compromise customer experience for a return that is slightly higher by less than 1% in terms of return. Then the third important element to look for is the fund costs. Some money market funds do charge extra costs above the usual 2% management fees, which eat into your net return from that vehicle. And the fourth, we shall look at the compounding frequency. While majority of the money market funds compound your return on a monthly basis, we have a few that compound on a daily basis. The higher the compounding frequency, the higher the overall return that you get from that investment vehicle. And lastly, but not the least, number 5 is the return. And the reason why I place the return that you're getting from the money market fund as the last important thing to look for is that the return is just a basic requirement from any other fund manager. We are not from any other fund manager. The fund manager promises to invest client money collected through the money market funds, aiming to maximize the returns and give us a return that is way above what we can get if you were to invest as DIYs in the short-term instruments. Thank you for watching, and see you in our next video.